Let me now bring on board Chris Wood, equity strategist with CLSA. Chris, good morning. What a delight to have you back on ET Now. Thank you for joining us. Chris, last time when we interacted with you was in Singapore, and that was in the month of June. That time you were bearish on India. You were a bit worried about the pace of reforms. But given the way how news flow has improved in India of late, are you an India bull again?
Well, I've been overweight India since early this year, actually. But what I was more overweight, but because the benchmark, Indian benchmark has risen in the context of the regional indices, I'm now only slightly overweight. So I'm frankly going to assess what I find out this week in India from meetings to then take a view on whether to increase the overweight or not. In my view, the key issue, top-down issue for India is has the investment cycle bottomed? And more importantly, is there any evidence that the investment cycle momentum is going to start re-accelerating? So that's what I'm going to try and find out in India this week.
But what is your initial understanding? Do you think the investment cycle has bottomed out? And because Reserve Bank of India is now committed to cut rates, the investment cycle will only pick up?
My current sort of understanding is that there's a good chance the investment cycle has bottomed out. However, I don't have any compelling conviction like now that we're about to see investment cycle resume. In my view, a large part of the improvement in Indian sentiment this year has been driven by the fact that the Eurozone news flow has calmed down. So I've been viewing India as the most high beta market in Asia because of India's current account deficit and reliance on foreign portfolio flows. India is extremely insensitive to the risk-on, risk-off sentiment globally. That's why India was badly hit by the Eurozone crisis. And for now, in the last several months, because of Mr. Draghi's promise to buy periphery bonds if necessary, the European situation has calmed down. We're in a timeout in the Eurozone, and that has allowed the Indian markets to perform better. However, if we get real evidence that an investment cycle is resuming in India, then I believe the vulnerability to Eurozone news flow will reduce, because then you will have a good domestic story in India again. But for now, I haven't got conviction on that.
And
so I would interpret the better market action in India is primarily a consequence of the more calm situation in the Eurozone.
Morning, Chris. And what's probably going to add to your argument of no conviction for the Indian investment cycle picking up is the fact that the Reserve Bank of India, despite the soaring inflation, has not gone ahead and cut interest rates. Do you think that India can, in fact, hope to see some momentum in the projects despite the interest rate scenario remaining high? Or do you believe India does, at this point in time, face an investment cliff?
Now, I'm hoping that my base case is frankly that the Indian investment cycle sooner or later is going to resume. There's growing focus upon the part of the Indian government on the need to get the investment cycle going again. It's quite clear India needs the investment. It's quite clear the infrastructure bottlenecks will otherwise become formidable. So my base case and my hope is that the investment cycle will resume. I just haven't got compelling evidence of that as yet.
Chris, are you
in terms of monetary policy, inflation remains pretty high in India, so I can understand why the Reserve Bank of India is unwilling to start cutting interest rates aggressively. The Reserve Bank of India has been sending a message to the Indian government that before the Reserve Bank undertakes more meaningful monetary easing, they want to see the Indian government take meaningful measures for fiscal consolidation. So personally, I think the central bank approach is correct. The pressure should be put on the Indian government to move fiscally.
Chris, are you a bit surprised with the kind of inflows Indian markets have received this year? India this year has got something like $18–19 billion of fresh inflow. That's some kind of a new record.
No, I think it is surprising. I was also surprised last year how little foreigners sold. So I think it's both, it's surprising this year how much they bought, surprising last year how little they sold, and I think that reflects fundamental belief on the part of foreign investors in the Indian growth story, and I think foreign investors are assuming, like me, that sooner or later the investment cycle will get going again.
Chris, Indian markets have been stuck in this range from last 4 years. So when do you see Indian markets will snap out of this 4-year bear range?
Oh no, if we get real evidence that the investment cycle is returning in India, you're going to snap out of the bear range and then you'll be back in the new bull market. And if India gets an investment cycle, infrastructure cycle going again, there's no reason why India can't grow 9–10%. But you need that clear evidence.
Last time when I interacted with you, you were of the view that it is time to sell high beta, which is a market like India, and it was time to buy US dollars. Have you changed your view on that trade?
High beta, you mean by what? High beta equities?
High beta equities.
If we're talking short term about the dollar, I think where the dollar goes in the short term is going to be driven by the US presidential election. On that specific short-term issue, my view is that a Obama victory will mean Mr. Bernanke or a Bernanke clone remaining at the Fed, more unlimited QE, so I think that's dollar bearish. If we get Romney winning, then the market will assume that Mr. Bernanke will not be reappointed when his term expires, and that will, I think, lead to a dollar rally.
Chris, what did you make of the fiscal...
I think that the short-term...
Go ahead,
Sorry?
go ahead.
The fiscal cliff will be driven... Well, the fiscal cliff will be driven by the political outcome in Washington. My guess is at the last minute, you will see a typical last-minute fix in Washington to try and prevent the worst aspects of the fiscal cliff. But we're not going to get any clarity on that until the end of this year. So that's going to remain an uncertainty overhanging the market. But if we get any kind of division in power in Washington, where one party controls the presidency, another party controls the Congress, clearly there's a market's going to remain nervous on this fiscal cliff issue.
Chris, what is your understanding of Indian consumer stocks? Do you think Indian consumer stocks, the FMCG stocks, some pharma names, they are priced to perfection?
Now, they are priced to perfection, but they've been priced to perfection for some time. And the fact is, if you're a long-term investor, you're not worried about short-term moves. This remains the core area of the market to own. Now, clearly, if we get evidence investment cycles returning in India in the next 3 to 4 quarters, you're going to get a period in time where the infrastructure-related plays, the Larsen Toubros, IDFCs of this world, are going to dramatically outperform the consumer stocks. But if you're talking about investing in India for the next 10 years, I think you still want to retain some of these core consumer franchises. But I would agree, a lot of these stocks are right now priced for perfection.
Chris, over the years I've interacted with you, there is one call which you've maintained, your bullish outlook towards Indian private banks. After the recent run-up, are you still bullish on Indian private banks, especially the ones you like, HDFC Bank and ICICI?
No, I still like the Indian banking story. Fundamentally, I think there's been a lot of credit growth in India since the start of this century. What's been impressive is that the authorities have managed the credit cycle basically well. You have avoided thus far any major asset quality deterioration in the banking system. Sure, there's been a pickup in NPLs, there's been some restructuring of loans, but fundamentally these big consumer lending franchises have remained healthy. We do have a potential NPL issue in the infrastructure power area, but fundamentally I remain fundamentally sanguine on the Indian banking story, and that's why I retain Indian banks in my long-only portfolio, which I've been running for 10 years. However, I think the whole story will get a major uplift, both the Indian story and the banking story, is if we get evidence that the investment cycle's coming back.
Chris, what would be your overall view on the IT sector, given that we have seen the earnings gone by and most of the large cap and marquee names seem to have disappointed, particularly when it comes to their forward guidance?
Yeah, no, I'm less excited by that area. To me, the key issue I want to find out this week in meetings in India is whether we've got there's grounds for more optimism on an investment cycle resumption. That to me is the key issue in India. It's the investment cycle, the infrastructure area, which if it gets going again, has the potential to achieve 9–10% real GDP growth in India. So that's what I want to find out. But so long as you have these high interest rates and lack of fiscal consolidation, the issue is, does that happen or doesn't it?
Chris, many may not remember, but I certainly do, your call on Titan, and now that call has worked like a charm. Are you still bullish on Titan?
Well, again, I need to check this out this week, but my fundamental base case is to maintain that in my portfolio unless I'm given a very good reason not to.
So are you bullish on Titan?
I want to retain some basic consumer... Yeah, I am still. I visited a Titan store yesterday, and I saw a lot of people in it.
I'll take my chance.
It was the busiest store in the shopping mall.
Okay. I'll take my chances with this one. You said you are not excited about Indian IT stocks, but if I look at India's largest IT company, TCS, it is sitting right up there. It is at an all-time high. Do you think it will be difficult for long-term investors to ignore TCS?
No, look, if you're an Indian dedicated investor, you will own it. Where I've frankly been focusing more in Asia, this is not an Indian issue, but where the whole BPO sector has had a real growth spurt in Asia in recent years has been the Philippines. So I've been focusing more on that sector in the Philippines than in India. The Philippines for the last year has been my favorite story in Asia. Because the whole BPO business has taken off in the Philippines. And it represents growing competition for India.
Now, Chris, globally, what has dominated the year 2012? A, it is central bank policy action, and B, it is Europe. So what, to your mind, will dictate and dominate global markets for next 12 months, for next 18 months?
I think it's going to be continuation of central bank policy moves and the Eurozone situation. I think you're absolutely correct to say that's what's dominated this year. In my view, since the global financial crisis in 2008, the key variable investors have had to focus on is policy moves in the developed world. So the key events this year were Mr. Bernanke committing to open-ended QE and Mr. Draghi promising to buy periphery Eurozone bonds if necessary, providing the relevant Eurozone periphery countries agreed to various structural reforms, fiscal austerity, by signing an MOU. So the key outlook for the next 12 months is first, does the EC bond buying program kick in? And second, will this open-ended QE be continued by the Fed through the next year? Those are the key issues. And conceptually, the way to look at this is that we began a bull market in G7 central bank balance sheet expansion in 2008 as we moved to the zero interest rate level. And my base case is that G7 central banks will continue to expand their balance sheets because growth will continue to disappoint. And ultimately, central banks, G7 central banks, will expand their balance sheets to such degree that investors will lose confidence in the relevant government bond markets, and we will get a crisis in the current fiat paper currency system. And my base case is that during that period, the price of gold will go parabolic.
Right, to dwell on gold, Chris, do you advise investors to hold gold against systemic risk? Do you think there is more steam left in this commodity?
No, I think gold's going way higher. My minimum price target for gold in this bull market is $3,500 per ounce. I set that price target in late 2002. I remain extremely bullish on gold. G7 central bank balance sheet expansion is extremely bullish for gold. Ongoing zero rates is extremely bullish for gold. So people who have not yet bought gold should do so now, because gold on Friday was $1,675 and moving back towards its 200-day moving average. If Romney is elected, which is not my base case, but which is obviously possible, then gold will sell off more because the market will focus on the fact that Bernanke will not be reappointed and you should buy more gold. This is a great opportunity to accumulate more gold. Gold is not a commodity, gold is money. And gold is the ultimate hedge against the unconventional monetary policies being pursued by these Western central banks.
Chris, do you think China really could be the dark horse for global economy? Because China soon will have a new premier. China is slowing down, and I guess most of the money managers are confused on what China could do next.
Right. Well, on China, I've got a boringly middle-of-the-road view on China. In my view, the Chinese growth cycle bottomed in the third quarter of this year. And so last quarter basically marked the bottom. And I think we're going to see better data out of China. I don't believe that China is going to have a dramatic rebound. I just think it's going to stop deteriorating. And we're seeing the residential property market already enjoying better transactions all this year. And we're now seeing infrastructure spending picking up in China. So my view is that Chinese growth this year, next year, is going to be in the 7.5–8% range. But China growth on a 5-year view is going to be gradually slowing, say from 7.5% to 6%. So if India does get its investment cycle going again, India is undoubtedly going to be growing more rapidly than China, but that is obviously a big if. If India does not get its investment cycle going again, best you can hope for in India is 5–6% growth.
Chris, you have mentioned in your report also that one of the critical issues in India does remain the power sector. You have, the lack of coal is one of the problems, as well as the coal-related corruption scandal. What do you make of all of this?
Well, this is obviously, the power sector has obviously been the key bottleneck in the Indian economy. That's been going on for some time. The one positive here is there's now widespread recognition of that. You've had moves to restructure some of the debts of the state electricity boards, so you're seeing policy making more and more focused on this area. So I'm hoping that the authorities understand that this issue has to be addressed before you can see a resumption in stronger growth. But frankly, I want to check this all out more in meetings this week to see how much progress has been made. But I would say the political recognition of these issues is now there. It's not like authorities are any longer in denial. So hopefully you will get more and more policy action will be forthcoming.
Chris, if I look at the BRIC nomenclature, or the acronym BRIC, India this year has been the best performing BRIC market. Do you expect Indian markets will continue to outperform other BRIC markets, because other BRIC markets are dependent on global commodities, and currently the demand for global commodity has subsided?
Right. Now, that's entirely correct. The reason why India has outperformed the BRICS is India is not geared into China, whereas China is obviously geared into China, as are Russia and Brazil to a lesser extent because they're commodity driven. I would say on my base case that the Chinese economic cycle bottomed in the third quarter of this year, that the market action in cyclical commodity-related stocks is going to be less bad than it was, which means that India will only outperform the rest of the BRICS in the next 12 months, in my view, is if we get evidence the investment cycle's returning. But if we do get such evidence, I believe India can outperform.
Chris, you have mentioned...
For me, the key variable in India remains the investment cycle.
Right, and to talk about the investment cycle, which certainly hasn't picked up, Chris, what would your view be? The ball is in whose court? Is it purely the government of India, or is it the Reserve Bank of India, who has adopted a very hawkish stance up until now?
I think very firmly the ball is in the court of the government. The central bank can cut rates to zero. If there's no action taken on this power sector to deal with these bottlenecks, there's no action taken fiscally, the fundamental problem will remain. and sooner or later India will have a balance of payments crisis and a currency collapse. So my view is firmly on the side of the central bank.
Is it too early to assume, Chris, that Indian rupee could go to 60 if the investment cycle fails to recover?
If the investment cycle fails to recover and there's no meaningful action fiscally, and preferably you want to see all energy subsidies abolished in India, which clearly we don't see yet, then it to me will be a matter of time before India has a balance of payments crisis.
So, Chris,
so I'll give you the example of the Philippines again. In the Philippines, there are no energy subsidies. Philippines is a poor country like India. So in what would make me most bullish about India, like now today, is abolition of all energy subsidies. And that's obviously not going to happen.
So, Chris, what are the data points you are mapping which will convince you that the Indian investment cycle has picked up, and those who believe that Indian investment cycle eventually will pick up, what kind of sectoral allocation they should adopt then?
And if you believe the investment cycle is picking up, clearly you have to own the infrastructure plays. Now, I put in my long-only portfolio, I put at the start of this year IDFC and Larsen Toubro back in because they looked bombed out and the valuations were low. But to increase allocation in that area, I think you want to see more evidence. I think the most important thing is the data is obviously going to only come back with a lag, is to see policy moves addressing the power sector area. In terms of the charts, if you look at charts of investment projects being approved, the charts you don't see any evidence of a pickup as yet.
Chris, my compliments, because IDFC and L&T, they both have been great market performers this year. In fact, L&T this year is up 70% and IDFC is up 55%. So great call. But after the recent run-up, are you still bullish on L&T and
my
IDFC?
Well, frankly, I only arrived in India yesterday, so I'm going to form a view on that by the end of this week. Right now, I haven't got a view because I want to check the situation out. But on Larsen and Toubro, my understanding, I'm not the analyst, but my understanding, part of the improvement in Larsen and Toubro has been based on projects they've managed to get in the Middle East. But, you know, for the real story to kick in, you need to see the domestic cycle picking up.
Do you still have Godrej properties in your model portfolio? Because I remember...
no, I don't. I did have it. Now, what I've done there is my Godrej exposure is now primarily in the consumer area.
You know, Chris, you did have the Reserve Bank of India who mentioned that now the current account deficit in the second quarter of the fiscal may widen on account of the slowing exports as well as the widening revenue. What is your own assessment as to where we're likely to see the current account deficit?
Well, no, I'm not the economist. My key point is the current account deficit is a vulnerability if we get renewed risk aversion in the Eurozone. If we don't get that renewed risk aversion, the current account deficit will remain manageable because foreigners will be happy to continue to invest in this market. But the current account deficit will become is a big fundamental negative to the Indian story if this investment cycle does not resume.
Chris?
If the investment cycle resumes, then foreigners will be willing to invest in India, therefore the current account deficit can be financed. So everything in India comes down to whether there's an investment cycle resuming or not. It's really as simple as that. Everything else is a derivative of that one simple point.
Fair point. So before we wrap, what is Chris Wood's big global call for 2013, his big India call, and his big sectoral call for 2013?
No, look, I'm not going to give an Indian call right now, frankly, because I'm going to have meetings this week. So for now, I'm just going to retain my exposure in my portfolio to Indian private banks, Indian consumer stories, and I've got these two stocks in it, IDFC, Larsen and Toubro. which basically are geared to the investment story. If I get real evidence in the next week that this investment cycle is coming back, clearly I will raise the Indian weighting, but I haven't formed that view yet. My fundamental advice to anybody listening to this, though, is to add to your gold position. That is the biggest call out there, because we are not in a normal situation in the world. It is not a normal situation where you have zero rates, where you have the central bank of the reserve currency of the world committing to formal guidance not to raise rates to 2015, committing to open-ended QE. The most simple, obvious thing to do is to own gold. Everything else is of secondary importance.
So between Indian stocks and gold, which asset class do you think will outperform for next 1 year? Because a lot of Indians have exposure to gold. In fact, India's 50% GDP is directly, indirectly locked in gold.
Well, that's a big positive for the Indian macro story fundamentally, because gold, I can tell you, is going a lot higher. But India will outperform gold next year if the Indian investment story resumes.